day all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Friday, the 8th of May, 2020, getting on to 5:50 p.m. Central Time. An announcement. I don't know that I'll be doing any videos in the afternoon for my market wrap-up on Monday. I had eye surgery on my left eye, I want to go back into February before this whole COVID-19 broke out, and they've opened up where I can get my other eye finally done. So I'm going to get both eyes in line with each other. And the day that I do it, I cannot do these with the bright lights and everything on me. But Tuesday, I'll be back. That's assuming it goes through. If I tell you the testing and what you have to go through, because Illinois keeps changing the laws and you have to have a COVID-19 test, but it has to be done within 72 hours. So you have to do it like a day like today. Then you got to get a place to take it. In other words, you get it, and my places want me to send it FedEx to by FedEx to Lubbock, Texas, where it gets done. Who knows if it'll all get in time? If not, just look for me. You'll see if I'm here or not. Okay, so now we get to the market, and you look at these markets, and I have to admit it's confusing. And if you were watching today financial TV, you get the bulls and you get the bears with all their stories, but the bears are confused. And the question that they're confused on is the economic data is nothing short of absolutely terrible. Even the Fed is going to step in maybe next week and begin the buying of corporate debt. Now, there's a spider that they will be gearing off of, as I understand it. I covered it in my subscription of my SPIDER ETFs in the afternoon today and started showing the charts on that. So I think you'd find that interesting. But the stock market is just like 2008 and 9. It doesn't care. It went and bottomed back then. It just went up. Every piece of bear news was bull news. Today, the market didn't blink when we had 14.7% unemployment rate. It looked at it that the market had been talking 16 to 20%, and you can get to the 20% number, according to Steve Leisman, if you count the furloughed people as unemployed. And we don't know how many of those furloughed will be unemployed or not unemployed. Nobody knows at this point. So that's where you're at with that part of it. As for everything else in the world, the U.S. is now starting to pull out its Patriot missile systems out of Saudi Arabia. They're saying they're not needed. Yeah, I think the oil price proves they're not needed. Why are we spending ourselves defending them when they killed our industry here? The next thing is the Iranians have been quiet, so Navy patrols are backing off, I'm hearing. Interesting. We keep hearing that there will be more buying by China to step up the pace of meeting their phase one. We'll see. The negative of all this is children are starting to get a disease similar to the COVID-19, if not it. It's broken out in New York. In Chicago, we're getting the same thing. It seems to be a delayed reaction. We're not quite certain what it means, but it's a new worry for the market. Financial markets don't care. They're beyond it. So when you look at a monthly chart of the S&P, and it's always fun to look at really big time frames, you've pulled back to the 18-month average in red, and you're sort of hanging right there. You can see what it did and pulled back. So you could say the market is corrected about a 50% move. When you take a look at the weekly chart, it ties in. This is a 50% move right through here. So we've got that. This would be 62%. So the bears are saying, and I will tell you what I keep hearing, the bears are saying that it's a bear market bounce and that's all that it is. The bulls are saying it's way more than that. We saw a low. You're not going to get another wave of information to take you down there. And the market bottomed out. I was watching TV today, 7 hours. I'm giving you the arguments. The chart action is saying they don't know. You broke down from the 62% correction to a 50 and back up. Okay, get much above that high, and it's a pretty hard argument you're going back down there. I agree with the people that are saying that. And I realize the fundamentals, but as a chartist, there's nothing bearish there right now. The bull action is that you have higher lows and you have higher highs. That's where I hang my hat on. What else do you have? You have to filter that with the 18-day average, and that's the rub. This is where the problem is, because you have the bias down until you're closing over that 18-day average of closes. And once you get over it, you got to stay over it to keep that bias up. Now that number's falling. If we take a look, it fell, last week's number was 29.85, 30.08. So let's say it's falling on the average 20 points a week. And you know, I can't tell you it's exactly going to do that. It's going to drop one of these numbers back here. You could plug in an opening at that and you'll get an idea where it's at. You heard what I said. All you got to do on your chart is do what I say. Add a bar, say it opens steady, drop a bar back there, and you'll have what the number's doing. But you're coming up to find that resistance. That's the point. What would break the pattern? Not taking out this low yet. In order to take out this low and break the pattern, you have to first take out this week's high next week. It's right now 27.17. What else do I look at? Where are the Bollinger Bands? The upper resistance, it's hidden by my part. You have to go way up, 3,500. We won't worry if the market's doing it on its way there. On the way down, it's out of play too. You'd have to go back to 23.54 and the market would already be talking, uh-oh, a test of the lows are coming in. So they're not in play. Momentum is in play and it's still drifting to the upside, not sideways. It's still gradually pushing itself up and the market is responding to that. So I think you're into the resistance now between 28.87, let's call it, and 29.69. That's where I'm looking for the resistance points. In the NASDAQ is saying I'm in good shape. It's bouncing around the 18-week moving average of closes. I mean, this is important. And it broke out. So now we have an outside week up. Where you should get nervous is write down on a piece of paper. If this week's low is taken out this coming week or the week after, on a weekly chart, this would be called, if that's taken out in either week, a bull trap, and the market would come down because of the setup of the outside week up. The objective would be, and this is what I teach in the course, doesn't mean it has to go there, by the way, but my objective would be 76.98, the 100-day average, and it'll be a little different value then, or the Bollinger Band. It's always the closest of. That doesn't mean I'm telling you go short or anything. I'm telling you what I see on the chart. Until that occurs, guess what? You got your blinders on like a horse. You're looking one way. I'm bullish. And this market's trying to go to the upside. The market's also, I think, made up in some of them on the QQQ where they're higher on the year. So pretty interesting. The Dow reminds me of the S&P. We've had the swing line up, the bias down, the resistance pretty clear. It's between the 200-day average, which used to be a number that, you know, if you were over it, you're bullish. Well, I'm sure the trade's going to say this market's fighting at that number, and it's holding on here, and the 18-week average, and of course you got the 100 above it, but this is the zone. Now, it was not an outside week up, so it doesn't have the same pattern as the NASDAQ. If you took out 22,814, that would break this pattern of higher lows and higher highs. But because you're still under that 18-week average, the bias is down. When I look at the Russell, it's the same thing. Higher highs, higher lows. A heck of a bounce. True bears are going to tell you this is a bear market rally. The bulls are screaming, no, it isn't. It's a bottom. The market overdid it to the downside and it wants to run up. What we all have to understand is you're headed towards these averages right here in the three other indexes that don't have the benefit of FANG part of it. They don't have the tech part per se. And this is what we have to watch and see what these small caps do as the debt comes in and so on. In the VIX, and this is the weekly chart, the market's got a 2 in front of it. Uh-oh. We haven't had that. We were 85. Now we're back to a 2 number. And we haven't on the daily chart yet hit the bottom Bollinger Band that I saw. When you hit it, I'm looking for the pros, whenever you hit it, to write some puts to see if the market's stretched out like a rubber band. We'll see if they do that. But right now, trend down, bias down. You're under the 18-week average, momentum down. Everything's bearish about this. The bulls are winning on the stock indices, and you can see it in the VIX at this point. In the 10-year note, well, we have an outside week up, so I'm going to repeat what I said. You take out the low of an outside week up, I teach that often leads to price making a move to the closest moving average or Bollinger Band. They're both underneath the market in this case. Everything's under the market here. But if the market's going to rally from here, that shouldn't be taken out. You're in a bull case. You got the higher lows. Today, this week's high of 139.16 didn't have to take that out yet because that high is higher than that one. Everything's still a go on this market. In the dollar index, a churning market. You've got higher high, lower low. You can't get underneath the 18-day average of closes. It's drifting. That's about the best I can say about it. Eurocurrency, where's the battleground? 18-week average of closes. And it's not putting together trades that make any sense. You get down, you don't get to the Bollinger Band, you get to other parts of support, and then it shoots back up to a higher high. This is not typical of currency trade. Currencies often really set into trends. This is still something else that is going on in these markets. I think it's the uncertainty of the economics. In the Canadian dollar, we're in a short covering rally. You've got the higher lows, you got the higher highs. You haven't shown that you want to break that pattern. The trend is not confirmed because you're under the, under the 18-week average of closes, and momentum's trying to come up. A short covering rally, not a trend rally. And there's a difference. You'd have to have the bias with the swing line. Japanese yen. On the daily chart, it was a miserable failure this week at the upper Bollinger Band. On the weekly chart, it's still pointing to the upside. And on the daily chart, it didn't turn down. We just got to a number that proved too much for the market. This market stays in an uptrend as long as you don't get back under 92.62. Bitcoin on a tear this week, up $1,190. The daily charts are bullish as can be. This chart's bullish. It joined the bull camp, if you think about it, when it closed over the 18-week average. You already had the higher lows, higher highs. Momentum's gradually pointing up. You're on your way. What's the next resistance? Well, as I look at it, the next resistance is 11,082. Support's back at 82.45. Brent, WTI, and Brent fighting with each other. Okay. There's still a $6.23 difference. Brent is still stronger than our crude. And when you take a look at the Brent here, it's in a downtrend. You wouldn't think it because of how Brent has gone up. It has come off $16 and it's right now at $30.97. It's basically on a weekly basis doubled itself, and you would think, my God, it's bullish. Well, it's got lower highs and a lower low. The momentum is now different than it was. The momentum has turned up. So momentum is often a precursor to what price is going to do. But you still got to take out 36.43 because this is working out of a trend that was down. Now it's correcting itself out of a market that is now what we'll call oversold, correcting itself to a degree. And I generally count on these weekly charts. The trend of momentum is either pointing up, down, or neutral. I'm going to say it's up. So I've got the momentum up. Will it be able to carry the market through 36.43, or does the market start failing and start making a slide back? WTI. I'm coming to the rescue, baby. Here we are with the market getting under the Bollinger Band to a negative $40.32. Magically, it managed to close the week over the Bollinger Band, came back, and it's still coming back. Now, the high this week is 26.74. It too hasn't taken that up, but it didn't have to. The pattern was already broken. You had gone up, down, and now you're back up. There is no trend pattern here. If you keep rallying, well, 37.30 would be a heck of a number. I think we'd hear every oil man jumping up and down for glee at $37. I don't think that's going to happen. So the question is, between here and there, where are you? Now we're cutting more oil. We're doing it on a regular basis. We cut today like another, I think we're down to historic lows. We cut another 35 or so rigs out, both horizontal and regular rigs. So you'll want to see what I write over the weekend. But that's the supply factor. We've got to get the demand factor coming back in, and that's going to take the time. People still aren't driving that much. Rebob gasoline, seasonally people do drive. So any demand after you've taken a market down to 30 cents is going to create something pretty important. 47 the low here. I don't even know what this low, I don't remember. It was a crazy number. You got to 37 cents, 37 and a half cents. And now the market is coming up and away it goes. It's almost tripled itself. I wouldn't be surprised if it gets up to that 18-week average. Gasoline, people are going nuts. They're opening movie theaters again. In Illinois, they just opened one. In Indiana, I hear they're opening. New Jersey, they're opening them again. These were things you couldn't use. They were doing outdoor sermons at these, anything they could. Flea markets. Suddenly they're in vogue because people want to stay with their family in their car, and it's a great way to get entertainment. I even understand that you call now and they'll bring the popcorn and all to you. You don't even go inside. Of course, you got to figure out bathrooms because that's a problem. But looking at it, interesting, so I think that's an interesting play too. So, you put it all together, you try to come up with ideas, and that's what I try to do in my newsletters, and that's what I do in the morning, especially in my subscriber video. What I do in the subscriber video is I'm able to say first thing in the morning, I've read the Asian markets, read what's going on in Europe, I've given you the highlights of everything, all the reports that's come out of them that are important in my view, and then I'm telling you the reports we're about to get, and I'm doing this at about 5:40 in the morning. You'll have this, and it's posted sometime between 6:30 typically and 7, but we found a way where we think we can put this a lot quicker up, and once I get back from my eye surgery, I will probably begin that this week, and they'll come out even earlier than that. And that's because the computer that I can use here, that I've got another one, it's really high powered. I mean, it's insane. And that's the one we'll start doing that with. So how do you get all this? Well, it's pretty simple. All you do is go to our website and go under the word research. It's all explained there. It's simple as can be. You can call my staff. They'll work with you, or you can just go there and sign up, and that's what most people do. You're going to get access to my special reports, which other people have to pay $2.50 for. They're included in this. You're going to have access to our handheld mobile app that has these videos in them, my subscriber videos in them, and it's a push notification. So as soon as I put them out, it tells you they're out. You can watch them on the phone, you can watch them on your computer, anywhere that you want. Remember, everything's available on our website as well. Our website's more of a catalog than it is a website for prices. Our charting software and our phone apps are where the prices are. Why should we do that on the computer app? It doesn't make sense to me. But in any case, that's all you have to do. Remember, I may not be here Monday. I'll be here Tuesday for sure in the afternoon. You take care.